This is Ed Ponsi, your FX educator, speaking on behalf of FX Street. Once again, it's the 4th of July. Long time no see, everybody. I hope everybody's having a great day. All my friends in the United States, if you're here with me, or if you're watching this on the recording version, happy 4th of July and happy Independence Day, and to everybody else around the world, well, hope you're having a great day. Let's get started. If you do have any questions at any point, do please feel free to enter them in, and I'll be more than happy to try to answer any questions that you might have. We'll be taking a look at some charts and a lot of various other things, okay? Apologize for being late. I just had an internet issue. I think we're all good now. So let's get started. First up, right, how many of you folks, when it was 6-1, at Ladbrokes and at William Hill and at other places in the UK, other betting parlors, how many of you folks said, let's take Brexit at 6-1, 6-1 payout? Of course, Brexit did win because the polls were wrong. And let's say, was it 10-1 just before midnight? Oh my goodness. Well, the reason why I said 6, that was the odds the last time I was on here. I've been away for a few weeks. I've been traveling out on the road, and so I wanted to, but that was amazing. Yeah, 10-1. I never saw anything quite like it. And another thing that I've never seen anything quite like, the activity that we saw that night was nothing short of amazing in terms of price action. That 1,700 pip candle that you're looking at right there, boy, remember that gap from earlier in the week? Wow, did that gap ever get filled? And it was pretty phenomenal. Well, the thing of, thank you, Dia says I was spot on about the polls. And the thing about the polls is, like, you know, just thinking back to last year, right, there was an election in 15 right here, and the polls were all wrong. And, you know, I forget exactly what that election was about in the UK. I think it was parliamentary. And so May 7th of 2015, the polls were fabulously wrong just 1 year earlier. So it didn't make sense to me that people were just assuming that the polls were going to be correct this time. That and the fact that the degree of commitment that I was seeing from the people in the Leave camp, you know, as opposed to the Remain camp, just seemed like nothing was going to stop them from getting to the polls. But the polls are wrong all the time. Not every time, for sure, but certainly wrong enough. They don't really always give you an accurate idea of what's going to happen. So the polls were wrong back here in May of 2015, and the polls were wrong here in June of 2016. As we can see. Now, probably the most interesting thing about this candle, right? You can see we just go up and kiss 132. Intervening, you know, I want to explain something that happened that I thought was phenomenal. But if you understand why the reaction was so strong, try to think of it this way, right? Imagine that you ordered a pizza, right? You ordered a pizza from your local pizza shop. And if you order a pizza and a pizza shows up, you're not going to be terribly surprised or amazed. You're not going to have a strong reaction to that, right? Because you ordered a pizza and, heck, you got a pizza, right? So there's nothing to get excited about, right? But what if you ordered a pizza and something slightly different showed up, like, I don't know, maybe you ordered a pizza with mushrooms and instead you got a pizza with anchovies. You might react to that, or you might just eat it because, heck, you're hungry and maybe you don't mind anchovies all that much. Okay, I do, but that's besides the point. You know, but what if you ordered a pizza and something that is absolutely nothing like a pizza shows up? What if you order a pizza and they leave a cow on your front lawn? Now what are you going to do? You're going to react I suspect that you are. I suspect that you are. And the market reacts very strongly when it gets the thing that it is not expecting. And that's why we saw a strong reaction here, because the market did not expect what it got. It did not expect to get what it ended up getting in the end, and that creates a strong reaction. So speaking of strong reactions, right? If I wanted to tell you, if I wanted to create an example, like a perfect example or a near perfect example of round numbers in action, because we often speak about round numbers and their significance. And I don't think I've ever seen anything quite as dramatic as this, right, in terms of round numbers. You can see we just get up here and kiss 150, and that's at 6 p.m. my time in New York. So the polls were just about to get started, and there was some last-minute buying to push up to 150 to clean up any orders that might be there. I strongly suspect. Why? Because how do banks and brokers make money, right? Banks and brokers get paid when orders are filled, right? Plain and simple. So why do orders accumulate on round numbers? Well, you've probably participated in the round number phenomenon yourself at some point. You may have said, I'm going to buy that stock if it drops to 20, or I'm going to sell that stock if it rises to 50, or I'm going to exchange that currency if it hits 2 to 1, right? So these are all examples of round numbers. Remember, most of the orders in the Forex market are not from traders like you and I, you and me. They're not from folks like us. They're not from speculators who are trying to make money on the ups and downs in the market. Most of the orders in Forex come from banks. But why? Why are they coming from banks? Because huge companies that do business in a multitude of countries need currencies every day. You know, General Electric is my favorite example. Huge multinational company doing business in just dozens of countries, probably needs dozens of currencies on a daily basis. I mean, if General Electric has employees in India, they can't pay them in US dollars. They have to pay them in rupees. If General Electric wants to buy computer components from a Japanese company, they're going to need Japanese yen. And this is where 2/3 to 3/4 of all the transactions, transaction, 2/3 to 3/4 of all the volume is coming from big companies to big banks. And those big banks are filling orders because the companies need the currencies. Well, those companies are not trying to make money in the Forex market. They're not trying to lose money in the Forex market, but the key to their profits is not based on whether the euro goes up or down today. Okay? They just want to get as many euros, and they say, look, they call the bank, look, get me as much as you can at 109 on the euro. Get me as much as you can at 112. Get me as much British pound as you can at 135. Get me as much Japanese yen as you can at 103. You know, things like that happen, and orders do gravitate toward round numbers. So it behooves the banks and the brokers. Now look at the time of day here. This is 5 p. 1700 in New York is one of the quietest times of the day. Okay? In the U.S., it's 5 o'clock and we're going home. The U.S. traders are going home. They're having dinner with their families. Day is ended. If in the UK, that's 10 p.m. and everybody's getting ready for bed. And if you're in Tokyo, or Singapore rather, that's 5 in the morning. So this is the time of day when you're seeing the least amount of activity. The least amount of activity is occurring right at this moment. And isn't it funny how at the quietest time of day, this push, and that looks like a small candle, that's 200 pips, right? That's a 200 pip candle. It pushes from 148 to 150, and they cleaned up the orders at 150 before. Why? Because they needed to get those orders. They said, look, we haven't been up this high in a long time. If there are orders at 150, we need to fill those orders and earn those commissions, which is what it's all about. If you're a bank or a broker, it's about earning commissions. So they give it a push, and they earn some commissions. It gets to 150, and then you see this drop. Now, the amazing thing about, and my friends in the UK know more about it than I do. I've never witnessed a live UK election on television before, and they report one town at a time. And this one, I forget the name of the town, but it came out 61% leave, 39% remain. And I'm thinking, that sounds high. And I think the market thought the same thing, because in this 5-minute candle, the pound drops about 500 pips from high to low in 5 minutes. It's just an absurd move. Sunderland, I think it was called. I forget the name of the town, but it seemed like it was coming out awfully high in terms of leave, and so we had that drop. And then we'd get returns from another town, and it would go the other way, but it sure seemed like the leave victories were bigger than predicted. This big rally right here is when the London returns came out. But look where, when this dropped down, remember, we kissed 150. It cleans up all the orders on 150. And then we get some more returns. It starts dropping like a rocket, right? And watch where it stops falling. Where do you think it's going to stop falling? How about exactly at 140? Maybe overshoots it by 10 pips, which is not much considering it's a 1,700 pip day range on that day. It just kisses 140 and bounces 600, almost 600 pips. It bounces in less than an hour after it kissed 140. But it was funny how it was rocketing down here, and it just felt like they gave it an extra little push so it would hit 140. So they cleaned up the orders at 150, they cleaned up the orders at 140, and they cleaned up everything in between. It must have been a great day for the banks and the brokers, is all I can say. They must have made a lot of money. Sunderland, thank you very much, Andrew. Sunderland, that's what it was. And anyway, it was fascinating. I couldn't sleep that night. It was truly an exciting experience. In fact, I was up a good part of the night because it was so intense. It was kind of hard. It was just impossible to sleep knowing that the British pound was moving the way that it was. I'll show you a few pictures I took while I was wandering around Wall Street in the middle of the night. Right, I had to get out and go for a walk. Right, so there's Wall Street in the middle of the night. Right, and then the sun comes up on Wall Street and people start showing up for work. So there's Wall Street in the middle of the night right there. Right, and then there's Wall Street, the dawn, right? That's the Trinity Church, and there's Wall Street, and the sun comes up, and everybody's going to work, right? It says, dawn on Wall Street, gonna be a wild one today. And was it ever, right? It was fantastic. I gotta admit, never saw anything quite like it. So anyway, they cleaned up the order. So if you really want to understand how banks get paid and why round numbers matter, then this is the perfect example. But it also is a very good lesson on stop placement. I mean, if you see what I'm showing you right now, and if you understand what I've been saying for the past 10 minutes, would you ever put your stop on a round number? I hope not. right? I would never put my stop on a round number. So if I'm short and I'm near this round number, my stop's above 150. If I'm going long, I would not put my stop above 140. I would try to put it below. Now, look, it's not always possible. Sometimes, you don't have a round number conveniently located nearby. It just doesn't work that way. But sometimes it does. And when it does, it can be fantastic, right? So all I would say is this, like if you're shooting for a big round number like 150, if I have a target, that target is going to go under 150. Targets I generally denote with blue. In other words, if my target's up here, I'm going to pull it down under that round number. But if this was a stop, right, and stop I'll denote with red, I would push that stop above 150, okay? And by the same token, right, if you were looking at 140, that stop should be below 140 if possible, and if it's convenient and if it's possible. However, if you have a target, that target should be above 140, should be above the round number, right? Now that said, I hope I saw some trades. I saw some amazing trades placed. I stayed out of it. I wasn't trying to trade this because I saw the spread going 30 wide, 35 wide. So the spreads went out of control. The ATR was probably the most amazing part of all of this. If you were watching the average true range, this is on a 5-minute chart. The ATR gets above 100 pips per 5 minutes. Okay, at the peak here, it's going 150 now. British pound, 150 pips a day would be normal range, maybe a tad on the high side. This was moving 150 pips every 5 minutes. And just knowing that was just making the blood just race through my veins. I had to go out and get a drink. It's like, I can't take this, man. I couldn't turn the computer on. And Wall Street, that particular moment, it was just, you go outside and, it's late at night, and usually Wall Street's very sleepy. Everyone's buzzing around. The bars are packed. Everyone's talking, about the same thing, and what's going to happen next. It was really very electric. The stops were completely unreliable. Weird feeling going to work that morning. I hear you. Everything was it was just the whole world felt different, didn't it? And the stops were unreliable. I saw stops getting filled. People sent me screenshots of their stops being filled 300 pips away from where they placed it, and not in British pound pairs, right? Like you're saying, oh, well, euro yen isn't going to become crazy. Yeah, it did. And someone sent me a screenshot where their stops on euro yen were filled 300 pips away. It just goes to show you. I mean, we saw huge volatility in all pairs, all the euro pairs, all the yen pairs, all the dollar pairs. I don't know if there's anything that wasn't volatile. It was just one of those. Yeah, New Zealand yen had a 30 pip spread. Yeah, I mean, yeah, it was unbelievable, right? I'd never seen anything like it. Anyway, now what happens, right? Not sure. None of us have been here before in terms of, we know that Article 50 has to be put into effect in order for the UK to leave the European Union officially. And Cameron has said he's not going to do it. And so we don't know who the next prime minister is going to be. So, does it even happen? I don't know. I really don't know. It's incredible to think that all of this occurred. Right? And I'll take you a step further now. So anyway, that was amazing, but now watch what happens next. What happens last week was also pretty downright amazing. and unprecedented. We saw a speech from Cameron. No, not Cameron. Carney. We saw a speech from Carney, and that speech occurs here. Euro pound flies. And when Carney basically says that he is going to cut interest rates and maybe quantitative easing. So Carney's speech came at 11 a.m. That day. And yeah, I'm going to be running a little bit long here because we started late, so just hang in there with me. I'm not going away just yet. So Carney gives a speech at 11 and says, we're going to cut rates this summer. We have other means at our disposal, strongly hinting at quantitative easing. So the euro flies up against the pound, right? So if you're long euro pound at that point, you're just happy, happy, happy. And then 1 hour later, the euro comes back the other way, because Europe, it's almost like they were waiting for the UK to say something, and they were waiting for that reaction to end, and then Europe says, and I forget who exactly said this at the ECB, but they said, we're going to expand quantitative easing. We're running out of things to buy. So in other words, when you have quantitative easing, you have to set rules about what you can and cannot purchase. So naturally, you're going to focus on high quality, right? We're only going to buy, let's say, AAA and AA rated bonds. We're not going to buy junk bonds, right? But then what happens? You start running out of AAA and AA bonds. And that's really what the Europeans said at that point. They said, we're running out of stuff to buy. But it's almost as if they were waiting for the British to say their thing first. And then the Europeans come in and say, look, we're going to have to expand quantitative easing because the stuff that fits our criteria, the type of investments that fit our criteria, we're running out of them. We're running out of them. There's not enough of them left. So you see the euro pound come flying back in the other direction. Just a wild series of events and unprecedented things. And that was also, both of these speeches, or both of these remarks come within an hour, between 11 a.m. and 12 a.m. I'm sorry, between 11 a.m. and noon, New York time. So they're coming out, 4 p.m. London time, 5 p.m. London time, and but it was fascinating that it was also on the last day of the quarter. So really, 4 p.m. London time on the last day of June is not just the last day of the second quarter. If you're in, it's basically the last hour of the second quarter. You've got to wonder. You've got to wonder if that's something that was pre-planned. But the amazing thing, though, if you look at it, and if you look at this in terms of the British pound against the dollar, you can see the reaction. All right, let me take you back a little bit further. It's still just been so wild out there. So just a few more hours, and right there. All right, British pound plunges. So the British pound had made it back up near 135 at that point. So Armageddon, right, which we were supposed to all be the sky was falling and it's the end of the world because Great Britain's leaving the EU, right? It was actually close to 135, and then that's, 4 p.m. London time, boom, they say we're going to cut rates. So they're certainly going to cut rates to zero, and they're certainly going to do quantitative easing, and they might have a few other tricks up their sleeve as well. So, and really, though, this pushes us right back down. Okay, I'm going to show you on the daily chart. Yeah. Who would have thought results would be such a theater? Amazing. Never felt anything like it. I know. I mean, I've seen some great movies and I've seen some great concerts, but this was free and it was more dramatic than anything. This is just the most dramatic. So we're still hanging around. But all those predictions about the world coming to an end seem to have been slightly exaggerated. In the U.S., our stock market, dropped sharply the first two sessions after Brexit. You can see them on the chart, right? And why was this one so green? Because they were watching the polls, and they felt so certain and so safe that Brexit was going to uh, fail and that Remain was going to win. So everyone was pushing them up. And then the market tanks. We lose 100 points in 2 days on the S&P 500. Sky is falling. World's coming to an end. But wait a minute. 4 days later, we're right back. We're right back where we started. Just unbelievable, right? So, and the UK market, I think, has even outperformed the US market over this time. But there are definitely signs of trouble out there in Stockland, and what I got to refer you to here are the banks in Europe, and especially Deutsche Bank, which is, don't forget, the biggest currency trading bank in the world. Would you look at that chart? Can you believe this chart? That's Deutsche Bank. Deutsche Bank is trading like it's going to go out of business. Okay, I'll show it to you on the weekly. Just a second. There's the weekly. So 2010, it's an $80 stock. Now it's a $16 stock in 2016. And it doesn't look like it's getting any better. Right? There's last week's gap down. They had trouble with the stress test. Right? It's trouble with the stress test. And the thing that's also troubling about this is they're not the only bank that looks like this. Check out Santander. Okay? It's basically the same chart. You'll have to take my word for it until this comes up. There it is. Santander is the same chart. Look at that, right? Going from 12 to 3. What about Credit Suisse, right? Credit Suisse is a Swiss bank, so they must be much better. Oh, don't bet on it. Look at that. Brutal. Brutal. Credit Suisse from 30 on the way to 10. UBS, right? UBS, another big Swiss bank. They all look bad. Doesn't matter if it's German, Spanish, or Swiss. They all look the same. They all look like they're in big trouble. Watch out, okay? Look at Royal Bank of Scotland. You want to see a stock go from 13 to 4? There it is. Okay, something very wrong systemically here. All the charts look the same. Okay, all the charts look the same. Don't be caught by surprise if something goes horribly wrong here. Okay? All right, that's going to wrap up the first session. Can you hear me out there? All right, that's going to wrap up now. Okay, I'm done. I'll be back at the top of the hour in 20 minutes with part 2. There's so much we haven't gotten to yet. So anyway, my name's Ed Ponsi. Thank you for listening. I'll catch you back here in 20 minutes. Thank you.